Today, we're going to talk about 5 different concepts to help you master price action. If you want to be a successful day trader, you need to understand these 5 concepts when it comes to overall price action. Knowing when to stay long bias and knowing when to start looking for shorts. This is going to save you a lot of time and a lot of effort. Let's get right into it. All right, so we're going to be talking about 5 different concepts. These are all very important concepts, so make sure you watch the entire video. Not one concept is more important than the other. They all kind of build on each other. So for the first concept, let's talk about a very simple idea with my favorite time frame when it comes to understanding price action, and that is the 15-minute chart. Looking at the 15-minute chart, we have this big old 15-minute candle, right? What we want to understand is that basically the middle of this candle is like a 50% pullback, right? If you're thinking about Fibonacci's, a lot of people will trade 50% pullbacks. Well, the middle of this candle, that 15-minute candle, is going to be the 50% kind of pullback area. What happens if we stay above this level? If we stay above this level in this area, what are you thinking? We're thinking that it's bullish, right? The bullish price action. There's no reason to get short here until we get candles to close below this level. And even then, we're still not looking for a short until we really have this kind of lower high formed below that level. So this is going to save you a lot of heartache and a lot of time if you're just able to identify one simple idea. The 15-minute chart, where is the middle of that candle? Right there in the middle. Okay, as long as the price action stays above that 50% area on that 15-minute candle, well, price action is bullish, and we're looking for price action to move up here, which it ended up doing. So on this setup right here, we're basically looking for a breakout. We go to the smaller time frames. This is the 9 o'clock candle, the 9:15 candle, and then the 9:30 candle there. Same idea. As the market starts moving higher, we can keep looking to see where these candles are closing based on the previous candle. So as we see right here, this candle closes right there, right? This is the open. To close that 15-minute candle, you had a wick on top. This candle closed at the low of the previous candle, right? So it basically got through the 50% point and closed down there. So that's going to be telling me that there's going to be more of a pullback coming. And where is my next kind of level? Well, I always love to kind of look for those areas of resistance turning into support, which it ended up doing. We pulled back here into the 40s before moving higher. Very simple idea. 15-minute chart. If we can't hold the low of the previous 15-minute candle, well, it's telling me that there's a pretty good chance that we're going to retest a previous area of resistance or support and vice versa. So we broke through the low right there. We moved down to this previous area of resistance. That was our previous area of a breakout level, right? We broke out through that level. We pulled back. We're pretty much like in this range. So we talked about this as well on Friday, the idea of getting back through that 20 level and then looking for that move up. And guess what happened? Look at that move up. The move up was beautiful all the way up there to the 228. So a beautiful move up. And that was simply identifying a very easy level to focus on here until we got back above this kind of area that we sold through. Until we got through that 20 area again, we're not looking for longs until we get through there. Now, you could be long down here off this level, off the 40s. Sure, you take that if you're looking for that. But overall, we don't really need to be buying breakouts. We don't need to be buying a move up until we get through this previous area of resistance right there, pretty much, again, at that 50% point on this 15-minute candle. The range of that 15-minute candle right there, 90 to the 152, 160 area, right? So we pretty much know that the 50% point on that candle is right around there, and that's where we need to get through. So once we got through there, now we have opportunity to start looking for long. So you really need to be looking at that 50% point on the 15-minute candle. If we can't hold the 50% area, well, then there's a good chance we're going to pull back, maybe put in a lower high, things like that. So we're looking to see where we're closing at based on that 15-minute candle. This is going to save you a lot of heartache and a lot of time. The second concept, and this is going to save you from buying the top, right? What you're looking for is trend lines. We have the Lux Algo indicator on there, but we're looking for trend lines in general. Like, we're just looking for trend lines. The market loves to kind of bounce off trend lines following, you know, the idea the market moves in waves. We're looking for channels. We're looking for all types of different reasons for the market either pull back, go higher, and obey these trend lines. So what we see here is, let's get rid of the indicator for now, just so we can see the clearer price action. Now, obviously, we don't know, like, you know, when the price is up here, we don't know where it's going to pull back of kind of trend. But we can identify that we had this trend line here on the 3-minute chart. So once the price action gets too far off of this trend line from earlier, we're thinking that, hey, this might be a top. This might start to get overextended. There needs to be a pullback. We need to pull back and touch a previous area of support, resistance, trend line, things like that. So once the market starts moving too much off of a trend line, we can think that there's no reason to get long for a breakout until we retest a trend line and then form the next area of structure or support, which you can see we got this big move up off of this trend line at the open, and guess what? We pulled back. What's interesting is you can see, you know, we definitely pulled back into this trend line from earlier in the morning, 9:15, the breakout, it moves up, and guess what? We pulled back, we just couldn't hold there, and we started to then move down. So again, what we're looking for here is trend lines. We're just drawing our trend lines here to see what the price action is doing, give us an idea. So here, basically have another trend line. We have a trend line, we're tapping. So I actually took this short here below the 100. It pushed back up into this trend line. It got down here and then started to squeeze higher. So at this point, this trend is invalidated. We're putting in this low here. We're holding this breakout area from earlier. And guess what? What do we do now? We just change our trend line once again. Now we have this kind of higher low, higher low, higher low. We're looking to get through that 120 level here. Once we get through the 120s, we can see that trend. We're pushing, and now we're long the breakout here in the move up. I really think you should be looking for multiple taps on a trend line and understanding that, hey, if the market's following this trend line higher, there's no reason to short. There's no reason to short anywhere in here. At this point, you know, I shorted the break below 100. We moved down. We then started pushing back up. We're putting in these higher lows. And at that point, the short is invalidated and the market wants to move higher, right? It's just that simple. The market wants to move higher once we basically start putting in that new kind of trend and starting to push back up. Remember, we need to be looking at that 15-minute chart and then look at the smaller time frames. So before you enter a trade, draw your trend line on wherever the most recent trend is. You know, draw your trend line there, draw your trend line there. Start to draw your trend line. A trend line right there, another trend line opportunity. You're basically looking for, you know, decent price action to touch the trend line and then follow it higher. And you can see here, we started to get a little bit too overextended. We pushed up, and guess what? We started to pull back. Now, obviously, this is all in hindsight right now, but in general, what we're looking for is multiple areas. These trend lines will be bouncing. There's your next trend line. You're just drawing lines and looking for those pullback areas and then the breakouts. I like to find that area of structure, kind of put my two trend lines together, look for a breakout. See here, we broke out. We started to push all the way up there above the 200. So the more kind of structure holds, the better the move higher is going to be, or lower based on the overall move. The third concept that I want you to focus on here is the 1-hour chart to find where your targets are. Where is the next area of resistance or support based on being short or long in the markets? Let's talk about. All right, I love the 1-hour chart to find where my targets are going to be. Daily chart, 1-hour chart gives you a really good idea of where support, where resistance is, where you should be looking to take profit based on the move that you're seeing. So right now we're looking at the 1-hour chart here. And all I'm looking for here, I'm like, okay, we got some resistance here at the 133s. Let's pull that across. Now, obviously the price, you know, earlier in the day, we wouldn't know that the price is going to be there, but we know that looking back here on the hourly chart, that there is resistance at these levels. So We're going to draw this. This is back from Thursday, October 19th. And then we're going to draw this across there. Again, we know there's resistance from back there in, this is Wednesday, the 18th. So we see that there's resistance there at the 133s. We see that there's resistance there at the 225s. There's some more resistance there at the 175s. So pretty much like these 2-3 levels here, there's resistance based on the hourly chart back there in October. Now we're in November. So you can see, you know, this previous area of resistance. How does it react to the price action today or on Friday? How did the price action react to these levels? So now we look at Friday, and would you look at that? We look at this first move of the day. We pushed up, we got denied, we pulled back. This previous area of resistance from the hourly chart that we identified before the market moved. Look what happens. It now turns into support there off of that resistance. It then pushed up to the 189 resistance from previous price action back there in October. It's not rocket science, my friends. If you're looking for a target, you're looking for where the market's going to go, all you need to do is just go to the left, go to the left, go to the left, go to the left. Well, on the hourly chart, it's easier, but just go to the left here. I can't even do it on this chart. There you go. We're back there in October 18th, right? We see the resistance there, and then we pull it over here, and we can see, guess what? Once again, where do we go to? The high there, pulled back all the way up there to the 25s. That push up was based on the hourly resistance that we saw back there in the middle of October. It's not rocket science, right? It's really just not rocket science. It's very simple to understand. If the market's going to push up to a level, it's going to push up to previous resistance. Test that. If it's going to go stronger, going to go higher, well, then it's going to break through. But if it's not going to break through, there's a pretty good chance it's going to pull back. That's a good area to take profit at. Nothing wrong with looking at the bigger time frames, the daily chart, the hourly chart, to find out where those major areas of resistance are. There's a reason the market got stuck at those levels before, and it's probably going to happen again. It's going to tap that level. It's going to get stuck. It's going to push through. It's going to pull back, whatever it is. You want to know where those areas of resistance are based on the hourly chart and looking back. Look back, 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 and you'll find exactly kind of where you should take profit at. The fourth concept is very simple here. I love these pivot points, pivot points, pivot points, pivot points. Let's talk about them. All right, pulling up the chart here with the pivot points. This is the 5-minute chart. You can basically use the 5-minute. You can use the 3-minute. You can use the 1-minute. Pretty much everything up to the 15-minute chart, you can use it there on the pivot points to see where those pivot points are based on the NASDAQ. So one thing that I would give you a concept here, if I'm going to give you a concept, an idea of how to trade very simply with the pivot points is simple. All right, think about it like this. If we pull back to a pivot point, we turn it into support, well, then we're bullish. If we pull back and we get through that pivot point and we can't stay above it, well, then we're bearish. So on this setup here, this is some from Friday again. So we already know this kind of 120 level. But what we're looking at here is we got the VWAP down there. I like the VWAP on this chart. The VWAP, the pivot points, they kind of love to play with each other. And you can see the big pullback. We pull back to the VWAP. And then we're kind of bouncing around here at the pivot point. So we look at the smaller time frame, the 3-minute chart. I talked about this on Friday. If we start to close below the pivot point, we can't get above it, we start to turn into a downtrend, well, then it's bearish. The market's going to move down. But what I want you to focus on here is we start trending higher, right? We start trending higher. So at this point, we're like, hey, if we start closing above the pivot point here, there's a very good chance that, guess what? We turn into a kind of bullish trend, start to push higher. The pivot point acts as support, and guess what? We move up to that next pivot point, which is also that previous area of resistance area. That 180, it was 187 there. The pivot points there at the 182s. So we can see that there's resistance there, but we know that if we can push out of this, there's a very good chance that we test that pivot point up there at the 182s. And you can see that pivot point now turns into support and kind of chops around there. But in general, these pivot points love to get touched. They love to act as support. The pivot point from earlier in the day acted as support. We got above it. And look at it. That pivot point now turning into support. So very simple idea. If we're closing above with bullish price action above the pivot point, if we're closing above that, well, then there's a good chance that we then turn it into support and we move higher. If we get denied, we start to pull back, and we're in the middle of these pivot points, there's a good chance that we kind of pull back into that pivot point. So you can see here how we kind of pull back into it. We turn it into support. We kind of start to move down a little bit. We then push back up. So Pivot points, pivot points, pivot points. I cannot stress enough, my friends. Put the pivot points on your chart and love them. Believe in them. They work. They're real. You know, it's not always simple, but it's pretty simple. If you look at the pivot points, understand the pivot points, the price action based on the pivot points, what is going on? Right? We're holding the pivot points. It's bullish. If we can't hold the pivot points, we're closing below the pivot points, it's bearish. We're looking for opportunities based on where these pivot points are and what the price action is doing based on these pivot points. The fifth concept and the final holy grail of concepts here is price action, price action, price action. You got to put in the time. You got to put in the effort. But I got one more little secret. One little secret more. One more little secret for you, my friends. Let's talk about it. All right, I think this is a very easy lesson for you to understand. You need to ask yourself when you're entering a trade, based on where we are with the price action, the market, the move, you need to ask yourself, is there a reason for shorts to get squeezed? Is there a reason for the bulls to dump, you know, get stopped out, whatever it is? Like, you need to be looking for what we call a trap. Where's the trap at? What is the trap? So the trap is basically something to convince either the bulls or the bears to create liquidity, get a move down quickly, and then right back up. So like this is a great example. We had the open on Friday, had this big squeeze up. We push up to the 78s. Guess what? We start pulling back. We're like chopping, we're chopping. And then for some reason, look at this. We like kind of hold here for a second and we dip right below there. We dip right below. Guess what happens? We had the low of this candle right there, 41. We had the low right there at 40. So we know that there's this kind of support here. And look at that kind of trap. It dips right down there to the 40s. People are starting to short, right? They're shorting this breakdown here, but what they don't think about is, guess what? We've got all that resistance or support. Well, guess, yeah, that support right there, right? 40s. Support's there. This is the trap. We're trapping shorts. We're stopping out the bulls. We're getting a big move, kind of like quick down and then right back up. And guess what? Look at this break to the upside. Look what happens after the trap has been set. The trap has now closed. It's trapped everybody. It's trapped the shorts there. It's trapped the bears who got stopped out on that move down. And look, we go from the 50s right up there to the 135s. We need a trap, basically. We need momentum. We need a run of stops. We need people to jump in, create liquidity. These shorts that shorted there are now getting shorted. They're getting, you know, stopped out. They're chasing the price action. They're having to cover. The bulls are starting to jump back in for this, you know, overall bullish breakout there. So find the trap. If you can see the trap before you enter a trade, look for a liquidity run. Look for something to happen before you enter a trade. We're looking for either the market to trick one side or the other, the bulls or the bears. I don't care who the market's tricking. I just want to be able to be like, hey, look at that. That was the trap. I saw the trap. You know, I see the trap. Ha 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 ha. I'm getting in now that I see the trap. Same idea here, right? The bulls get overconfident. We get the breakout up to the 60 level and we kind of push around here and we pull right back. So I'm looking for basically like wicks. I want to see wicks, and kind of breaking through certain levels. This was like a little bit of a trap right here. We broke through the support for a second. We pushed right back up. We got denied. But as you see, we start to put in these kind of lower highs, and start pushing back up. So the more that we can identify kind of where those traps are, you know, where those opportunities are. And what's interesting here is, look, you know, this area from earlier, that 50 area, guess what? Turns into support. We push right back up. I think you really gotta be looking for previous areas of resistance turning into support. And that's really gonna be a strong indicator of a bullish or a bearish move. So if a previous area of support turns into resistance, well, that's not good for the bulls. If a previous area of resistance turns into support, it's not, that's good for the bulls. Good for the bulls, good for the longs. So you're looking for areas where the market's trapped people, and then you're looking for that area either turn into support or resistance because it's going to be a much stronger move. So like we talked about here, again, kind of trapping above this level here. We pull back, we put in that lower high, put in that higher low, and now we start pushing back up. And we're like, oh, You know, these shorts that are short in here thinking we're going to move down. Well, now they're kind of stuck in here. And guess what? Whoop, we rip it on up there. So find the trap before you enter a trade. It'll make your life a lot easier, my friends. Find the trap. Don't be the trap. Well, be the trap, but don't get in the trap. Something like that. Trap or die. So there it is. Basically sharing with you guys 5 very kind of not, I wouldn't say simple ideas, but things that you can just apply. You don't need indicators. You don't need any type of experience other than just being able to apply these 5 concepts to your day trading regimen and asking yourself little questions like, is there a trap? Is there a resistance? Is there support? Have I identified my targets? Have I identified support resistance based on the market moving? Looking at the bigger time frames. Am I looking at the 15-minute chart to see where it's closing? Are we in the middle of the range? Are we at the top of the range? Are we at the bottom of the range? Are we setting up? Do I find structure? Just ask yourself little questions before you enter a trade, and it'll save you a lot of heartache and a lot of time, my friends. There it is. I will talk to you guys later on. Hit that subscribe button, like button if you enjoy these videos. I am out of here.